Join me as I dive into the world of stocks and challenge myself to figure out if HIMS is a smart investment right now. HIMS has made a name for itself in the telehealth industry, focusing on men's wellness and providing a platform for online consultations and prescription medication delivery. Their business model is built around convenience and discretion, offering services for a range of health and wellness issues, from hair loss to erectile dysfunction. This approach has resonated with many men who might feel uncomfortable discussing these issues in person. The telehealth market is crowded and competitive, and HIMS faces significant challenges. One major hurdle is regulatory scrutiny. As a healthcare provider, HIMS must navigate complex regulations around prescriptions and patient care. Additionally, building consumer trust is crucial. Many users might be wary of seeking sensitive health advice online. Competition from established healthcare providers and newer telehealth startups adds another layer of difficulty. Regulatory environments can shift rapidly, and any misstep could have serious consequences for HIMS. The company must stay ahead of the curve and adapt quickly to changing laws and guidelines. Consumer trust is another critical area. If users feel that HIMS isn't prioritizing their health and well-being, they could quickly take their business elsewhere. Moreover, HIMS needs to continuously innovate to stay ahead of competitors who are also investing heavily in telehealth technology. Let's take a look at HIMS' current financial health. The company's stock has seen some volatility in recent months, with shares experiencing a dip after a lukewarm earnings report. Despite this, HIMS has shown impressive growth in terms of revenue, with sales increasing significantly over the past year. Their market positioning is strong, with a loyal customer base and a recognizable brand. The recent earnings report did raise some eyebrows, with some investors expressing concerns about the company's profitability. However, HIMS leadership remains optimistic about their long-term prospects. They've been investing heavily in expanding their services and improving their technology. It's also worth noting that HIMS operates in a rapidly growing market. Telehealth services are becoming increasingly popular, and the company is well positioned to capitalize on this trend. Their focus on men's wellness has allowed them to carve out a niche for themselves. The market seems to be responding positively to HIMS' efforts, with the stock price showing signs of recovery. However, it's essential to keep in mind that the telehealth industry is highly competitive, and HIMS must continue to innovate to stay ahead. So, is HIMS stock undervalued or overvalued at this point? Some analysts believe that the company has significant growth potential, given its strong brand and expanding services. Others, however, are more cautious, citing the competitive landscape and regulatory risks. The general consensus seems to be that HIMS is a high-risk, high-reward investment. If the company can navigate the challenges ahead, there's potential for significant returns. However, investors should be prepared for some volatility along the way. Some experts recommend keeping a close eye on HIMS' regulatory filings and earnings reports to get a better sense of the company's trajectory. Others suggest considering a long-term perspective, as the telehealth industry is likely to continue growing. In terms of valuation, it's clear that HIMS is a company to watch. Their unique approach and strong brand have set them apart in a crowded market. To sum it up, HIMS is a company that's pushing the boundaries of telehealth and men's wellness. Their business model is built around convenience and discretion, which has resonated with many users. If you've made it this far, I'd love to hear your thoughts on HIMS stock. Do you think it's a smart investment? Let me know in the comments below. Don't forget to check out my other investment analysis videos for more insights like this.